JB here. Hope everyone's doing outstanding. Monday, April 7th, 8:58 a.m. I'm trying to stream in the audio, so you might be able to click and see the charts that I usually put up and record. So at least when I'm talking about the charts, you can actually see them. But talk quick about the market. Some names I'm looking at go from there. S&P futures off the lows this morning. I was saying it yesterday, well, on the week ahead rant. Uh, Thankfully, markets didn't do limit down Sunday night. So at least we get to the markets kind of found a support 482 or so on the SPY and have bounced. And we're sitting up here at 496. So about 495, been between 492 and 495 since about 6 o'clock. I, it's, um, I, this whole weekend's kind of like a whirlwind. Everything you read is, I mean, everything with the tariffs is negative, right? I mean, I think that's the obvious part of it. It's just how does this get resolved, right? So if the tariffs don't get removed, or if there's no compromise, there's no resolution between countries that hopefully are beneficial to everybody, uh, it's not good, right? So I still think I was in shock on last Wednesday. I was in shock that there was no headlines. I mean, Friday there was a little peep of some headlines from Vietnam that they're gonna zero tariffs for the U.S. and hopefully the U.S. will do in kind for our for Vietnam. But outside that, there hasn't been much, right? And then not only that, China said that 34% tariff reciprocal on the U.S. It's just not good stuff. And if there's no rollback or no headlines in the coming days, it's you know I it's really bad stuff. And I give that a slim possibility, but then I gave having those huge tariffs on Wednesday a slim possibility as well. So I don't want to rule anything out. I made comparisons yesterday on the week ahead rant, the moves, right? The 2008 financial crisis, obviously. Markets were kind of weak heading into September. Then we had the Lehman moment, and that was kind of like the straw that broke the proverbial camel's back. 2010 flash crash. So, the Greece debt crisis, markets were already kind of showing some weakness. And that day, I think they were down like 2%. And then, we all, well, you hopefully know somewhat about that. But then, of course, the COVID, we 2020, you have 2015 in the summer, August, China crisis, and now we have this, and the difference between all those and this is curable, right? I mean, there's an easy fix to it. It's not like we have to get quantitative easing or we have to cut rates to zero or do anything crazy, do bail out car companies or other companies or things like that. All that has to be done, and there has to be some compromise. There has to be rollback, or there has to be a pause. So, and the thing is, there's a cure, but the cure, it has a shelf life. The longer this goes on without headlines, the cure loses its potency, and it's just not a good thing, right? So, I'm still on the hopes, and if you've traded these markets over the years, some of that we've had crazy down days, right? And the people last night saying, "Oh, it's gonna be the worst day ever." Today, Kramer on Friday was saying it was gonna be Black Monday. I mean, you can't rule out. Who knows what's going to happen here today? But some of the biggest up days happen amidst all this turmoil. If you take a look at like the top 10 up days in U.S. history for the S&P and the Nasdaq, typically it's in 2008, it's in 2020, it's in 2015, it's in all these days where 1987. It's through all these days that we've had down days. So at some point we're going to have some crazy reversal. I don't know if today's the day, but I would not be surprised to see some headline come out, whether it's today, tomorrow, or Wednesday. Fingers crossed it happens soon. But anyway, so in regards to the overall market, I was talking about yesterday too. Support resistance. I mean, pretty funny. Look at my chart, and these are annotations over the years. So to come all the way down to that 505 handle, that's not a line I just drew in yesterday. It's been there for months. Came down to that. And funny it was the August lows 505.48 was the August low, and we came right down to that Friday afternoon, and then just breached that a little bit before closing at 505.28. So pretty much right there, and now we're down here under 490. So 490 is the bear market on the S&P. That'll be a big spot today. If we don't hold that, I might look to get some spec puts. Well, actually, probably SQQ calls, which I've been talking about. SQQ got added up to 75 strikes now. They were only up to like 60 heading into this week, and then CBOE added some more strikes. So that adds more options, because if the proverbial, if the shit hits the fan, there's some of these ETFs that can go parabolic, and SQQ could be $100 if the SPY breaks down to 440, right? Probably even higher than that. So that's what we'll be watching. On the flip side, we get over 500, I'm going to be nibbling some spec calls, because at some point there's going to be a headline, and we're going to get a bounce. So those are kind of the spots I'm looking at. I mean, take a look at the amount of stock trading over there. 200-day moving average on the S&P. It went from nearly 50% on Wednesday, and that was cut in half, and less than 0.25% of stocks trading over there 200-day moving average. Just crazy stuff. Risk, right? Risk happens fast, or however they say it. All right. And then pull back the chart on the SPY, and you can start looking. We have, I think it's April lows, which is 482 and change, which I don't have back here. And then you go all the way back to the start of 2024. I think it's 462. So those would be some big spots to watch. Um, and then I was posting these charts. So take a look. This is back in the COVID era, and funny enough, it's happened in March, April, which eerily enough is where we are right now. But take a look at these swings, and then you can see some of the reversals at the end of March. I mean, three sessions from 215 all the way up to 250 on the SPY, and that's different, obviously, because we're a heck of a lot higher. So percentage basis, that's a huge move over 3 days. I'm not saying that's going to happen, but if there was some kind of pause announcement or something, I would think that we'd have some kind of squeeze similar to that. So it's kind of tough, right? If you had puts on Wednesday afternoon and you're still holding them, you're looking great, right? I mean, some of those are up thousands of percent, but at the same token, all those could be one little tweet and we're going to have some crazy reversal. So that's that. I don't know why this is up here, but again, it's another name. Take a look. This is the 2010 flash crash. This happened in April, May. So again, the Greek headlines, you had all the fires in the riots, the protests. You thought that was it. And, we had the flash crash, and the rest is ancient history. You can see volatile for the rest of the year, but wasn't the end of the world. All right, so that's kind of overall how I'm playing it. I put on to watch the CPI data this Thursday. It's probably going to be the coolest we've seen in 3-4 years. You also have earnings season kicking off. The banks kick off on Friday. I don't think the earnings are going to mean as much as the commentary. JP Morgan, obviously, Jamie Dimon's already opted in on what his thoughts on that. But that's probably not going to be as important as the commentary, right? People are going to be they're going to be scraping those transcripts to find how many times he says tariffs or whatever. That's just how it works. Also, if you take a look, I talked about this too. Is that back in 2008, the financial crisis, the Fed rate was at 4.5, was at 2%, and that was for a long duration. We're at 4.5, 4.25 to 4.5%. So there's room for the Fed to maneuver, right? We're not even near those levels of the financial crisis. I'm not trying to compare, but that there's tools at the disposal. We have circuit breakers now that we didn't have in place back in the day. Used to not be able to short down ticks. There was all these things that have been put in place to kind of alleviate past history pullbacks, right? I mean, we've learned from those lessons, and they created tools to prevent those crazy swings. So, I'm trying to always think with a glass half full kind of mentality. So we'll see how things here play out. But, now the market's pricing in 4 rate cuts at the end of the year. Some are saying up to 5. I think it's like a 50% probability of a rate cut in May, which I think was down to 0.25%. And then you go to the June, it's like 100% probability that they're going to cut rates at the June meeting. And the May meeting's in 30 days. All right, so that's overall market. So now individual names, and GameStop, I got those calls, the April strikes on Friday. It's like a safe haven asset, right? Crazy. I mean, Bitcoin was holding up the entire week, was up 0.5%. Got those April strikes. It was up 11% on Friday. It's actually up 8% on the week. I was able to close some of the Aprils at the end of the day for nearly 100%. I'll hold the rest. It's gapping lower here this morning, but I would not be surprised to see a red to green move today. And if it does, I'll be looking to get some May strikes because there's assets out there, and if you've like REITs, other of these high dividend kind of assets that people invest in, GameStop, you see what's going on with strategy. I think these are like, when I look at GameStop and its fundamentals, I just think it heads higher. So that's kind of the story there. And then other names. So Wayfair got lucky with that news with Vietnam on Friday. Once the report came out, I'm looking for names to trade on that. And if you know Wayfair, a lot of they're pretty much a drop shipping company. So a lot of the products are sourced in Vietnam. So if there's 0% tariffs both ways, it actually might be beneficial for them. It might be a add to earnings. So I was able to get some calls. It actually got halted after I had the calls like 2 minutes, close some out for cover costs for 100%, then close more out for nearly 300%. I'll hold the rest. It's also gapping lower this morning. It was closed at 26 down here at 24.61. I like this to trade higher. So if it reverses into the green this morning, similar to what I would do with GameStop, I might get either some more April strikes, depending on what the premiums are, or possibly get some May strikes. Other names, so Restoration Hardware, premiums are expensive. This one reversed lows as well on Friday after Vietnam news. Funny, and I've talked about I don't know if it was last week, I was talking to the week before when I was trying to look for some spec positions to trade on possible positive, less than expected tariff rates that instead they were more than expected last Wednesday. But he came out after the close on Friday kind of, the CEO is very aggressive. I mean, if you follow Restoration Hardware, well, actually, it's called RH now. Back in the day, I mean, he hates the shorts. He's like one of those. He has very spins his press releases, and he was on his conference call for earnings last week, and he looked at the stock and he like cursed on the earnings call. So kind of funny stuff. But needless to say, what that means, he's very aggressive. So they came out after the close on Friday, kind of dismissing the tariffs, saying, we're the best furniture retailer on the planet. We back in 2018 when China and US had their trade war, we moved our sourcing from our manufacturing stuff from China to Vietnam. We're in a great position. If Vietnam and US work out a deal and it's 0% tariffs across the board, it's actually going to add to their earnings as well. Here's the name. The earnings weren't too bad, and I think a lot of it, and you can see the stock got destroyed since February. It's over 60, 70% to the downside. Could be a nice squeeze, especially if we get some kind of headline. That's that. Similar Decker. Another name that their earnings weren't so bad in February, but it just a snowball effect. And then as the tariff headlines picked up, I mean, it's just a name that's just similar to Nike, right? I mean, just not a great environment for those. But another name I'll be watching. And then on the flip side, I keep talking about SQQQ. They decay, so it's not a trade that you get some calls now and hope that it's over $100 in June. It's got to be volatile swings, because even if the market does sell off over the coming weeks, this will probably be lower than where it is right now. So, however crazy as that sounds. And that's it, folks. I'll be back on audio later. Let's have a great day. If things get crazy, I'll be back on audio when things get crazy. Let's have a great day. Rock and roll.